It's interesting to see how individual traders approach this business. Of course, there are different methods and ways to trade, but I'm talking about the mindset in regards to taking trading losses. And I think that is the number one criteria that can predict the ultimate success or the failure of a trader. So is mindset really important? And there are all kinds of thoughts in regards to trading psychology. And I've read some of the top traders say that their mindset is 90% of their trading game. And these traders, they take each loss in stride and they treat a loss as a part of doing business. They don't rant on social media about the unfairness of the market. They don't play the victim, but they understand that a loss is expected for their trading plan. And by accepting the loss and treating it as a positive, it allows them to continually push the buttons without the fear that can paralyze others. So wait a second. A loss is positive. Well, I should say the right type of losing trade. So let's take it from the beginning. Assuming you have a trading plan, there is something that has to happen in the market before you risk your capital. And once the variables line up, you take your trade. But all trades do not work out. By backtesting your strategy, you already have some idea of the expectancy of your trading system, and you understand that your wins and your losses are going to come in a random distribution. Inside of that trading plan are the rules that you will use to exit a trade that's not performing. Most of the time, that is a stop loss that you've placed in the market. And once your idea behind the trade is no longer valid for whatever reason, your stop is hit and you're out. Now that is a positive loss. That loss, it fell in line with the rules of your trading plan, and you implement those rules without failure. Taking the loss at your predetermined cutoff point is consistency in action, and it's proof that you are following your trading plan. That is a positive loss to take. Now, when should you beat yourself up over a loss? If there is a positive, there has to be a negative, and that's when you derail your trading plan for some reason. Maybe it's moving your stop loss further away from price after you initially set your stop. It can even be when you take a trade outside the parameters of your trading plan. If you lose money because you didn't follow your rules or because you treated your initial stop as a suggestion other than a rule, that is a negative loss. Now, on the flip side of that, we could say it is a positive loss because you were not rewarded for inconsistent trading. Once we're rewarded for doing the wrong thing, and this applies to a lot of things in our life, we will tend to feel that we could do the same thing again with the same result. And the problem is that in trading, it only takes one mistake to end your trading career. Losing a trading, it doesn't have to happen if you are hard on yourself when you make a trading decision that does not fit your tested trading strategy. Michael Carr said, "Don't worry what the markets are going to do. Worry about what you are going to do in response to the markets." You have two exits in your trades, your profit, your protective stop. And we never know which trade is going to be the winner. We anticipate the entry and we like a winner, but in the end, it all depends on the market and the bias of other traders. Don't go in with the expectation of a win, but an expectation of a positive outcome. And since you plan to risk an amount that has you removed from the risk of ruin, a loss is not such an adverse event. Where it does become adverse to the extreme is if you allow price to exceed your planned exit. So expect to lose. Expect to lose a predetermined percentage of your available risk capital. Adhering to the predetermined exit price in the case of a loss, it leaves you with an account that's still ready to take another trade. Losses are just a part of trading, as a win is, and that can make you believe that a loss on your term is a positive outcome. You adhered to your trading plan that allows you to fight another day. It gives you the confidence to take trade after trade, knowing that you have the capacity to adhere to an exit price that is suitable to account sustainability. The negative outcome is letting fear and hope take over and taking a loss much bigger than you planned. And that is the habit of those that are destined to account ruin. So change your thinking to accept the loss on your terms as a positive outcome. And I bet that you'll have an easier time in booking those losses and then just moving on to the next trade, not being gun shy.